Hey, this is Danielle. In today's trade review video, I'm going to be going over an SPX 0 DTE day trade from August 27th. This was a trade that I did about 25 minutes before the cash close, and I went ahead and let it cash settle for about an 83% profit. Basically, I went in, I sold premium in the form of an iron fly, but Thinkorswim calls it an iron condor. And then I just went ahead and watched the premium decay until the market closed. And I went ahead and got the cash settle price. So let's go ahead and talk about why this trade set up and how you can do it next time. So looking at the SPX, today was a pretty quiet day. NVIDIA earnings are going to be on Wednesday, August 28th after the close. And so it just kind of seemed like the market just wasn't really moving a whole lot. If you look at my watch list from today, you'll see that, there really wasn't a whole lot going on. Yes, you did have some of the semiconductors that were moving. Again, you have that focus on NVIDIA earnings tomorrow, but you just didn't see a whole lot of movement. Really in any direction. And if you look at the SPX using multi-time frame analysis, what you'll see is that, we had a lot of consolidation here, which shows up in the form of this 15-minute squeeze. If you look at a 30-minute chart and a 78-minute chart, you'll notice that it's also just a ton of consolidation. And then if you look at where that consolidation is happening, the consolidation was really occurring, definitely above 5,600, but between 5,620 and 5,630. So you can just tell based off of the candles where the price is getting kind of sticky. And then if you look at the 78-minute chart, you can see that there's a squeeze in consolidation on that time frame as well. So this can be a good time to sell premium at the end of the day in the SPX. Sometimes what will happen is there will be a catalyst and the squeeze will fire and then price will shoot up to the upside in the direction of the trend. And, you're going to be wrong on your decision to sell premium. But that's why you manage it using the market internals. So this is my market internals grid. This is a 5-minute chart of the S&P futures. I always manage these trades using the futures products just because, I don't know, they just move a little bit quicker. I think the signals are a little bit better. And one thing that I was noticing on the 5-minute chart in the S&P futures, and again, this is right about the end of the day when I was putting that trade on. So right here, it was about, 12:35. I always want to see what the buying and selling pressure is right around 12:30 Pacific time. So 2:30 Central time, 3:30 Eastern time. That last half hour, if there's going to be major volume buying or selling, it's generally going to hit right around this time frame. So I did wait until that time frame to put the neutral trade on. Now, if I would have put it on earlier, I could have sold it for more premium. But like I said, sometimes those squeezes will fire right at the end of the day. And then it's like, well, didn't really need a neutral trade because now it's a directional move. So I waited until that time frame. I could see that price was still completely stagnant, not really doing anything. We did start to get some high volume coming in. That's when these blue dots show up, but the candles just didn't really move. Now, if you look at the ticks, this is going to be the measure of the buying versus selling pressure. And the main thing with day trades is, especially when you're trading the indexes, you just want to pay attention to which direction the buying or selling pressure is going. In this case, like I said, right around 12:30 Pacific, there was pretty much nothing. I remember looking at the ticks and they were trading around 30, which is absolutely flat. Above plus 600 is going to be more buying than selling. 800 is going to be extreme buying. And then, plus 1,000 is going to be extreme buying. So if you look at it on the flip side, negative 600, that's when you have more selling than buying. extreme buying, and then very extreme buying. So with the ticks stuck between plus 600 and negative 600, that's the number one thing for this trade, because it just tells you that really a whole lot of nothing is happening. And then it also helps when there is a news related event that is upcoming, such as NVIDIA earnings, because everybody's waiting on that catalyst, and the catalyst is generally what's going to make those squeezes fire, and it's at that point you can make a directional trade. Another market internal that I like to watch is the vol spread. This was super flat today. It was up, it was down, it was up, it was down. But on a trending day, you're going to see it moving in one direction or another. Like, for example, this day, that was a really strong day. When you see the vol spread just explode at the end of the day, that's, people trying to get their buy orders in before the market closes. Then when, the market ends up gapping down and people are just selling stocks in the morning, it'll look like this. It'll look like this when, people are bailing the entire day, especially when it goes out on the lows of the day. And you can tell that just based off of, you can tell what those days were like without even looking at an index future chart, just based off of the volume. So today was flat, provided a good opportunity. Now, why did I sell the trade the way that I sold it? I'm pretty sure I, went over that. It was really just a function of the fact that the market was stuck at that price. You could see that there was a lot of trade there. You could also see that there was some high open interest. There wasn't as much as what I would generally like to see. This is the screenshot that I took right before I got into the trade. It was 12:35. At that 56.25 strike, we had 45,000 contracts, as far as volume is concerned. But, what was interesting is that there were more contracts at 56.30 and 56.35. So I was kind of going back and forth like, oh, maybe I should make a bullish butterfly at 56.30 or 56.35. But ultimately, because of the internals, I just stuck with this. And you'll see that the price of the SPX was at 56.24.14 when I put the trade on. So, I'm generally going to want to do these at the money. That's exactly what I did. I didn't really follow my own rule of selecting the highest open interest strike. But like I said, that's because, you could see where the candles were getting stuck and they were right there. So I got a $4.70 credit on this. That meant that I had about a 1-to-1 risk reward ratio. The max profit that I could have made was $480. The max loss that I would have taken if this went completely the wrong way and I didn't take a stop would have been $520. So it's pretty close to 1-to-1 risk reward. It's generally what I like to see. And yeah, just went ahead and threw on the trade. So after that, I basically just waited. I was in the trading room. This is a trade I did in the trading room. I went over some earnings trades, did a Kohl's trade, a Chewy trade, and you'll see that this screenshot at the end of the day, this was right after the market closed. It said that it's up 65%, but it was actually a little bit more because of the cash settlement prices. So if you look at these options and see where this landed, this was almost a perfect pin. When you sell the 56.25 calls and puts, and then the thing closes at 56.25.82, you're 82 cents off, which is extremely close. It's exactly what you want to see when you're selling a neutral iron fly, because what you're trying to do is you're trying to sell the options that are the juiciest, which is why we're selling them at the money. And then you want those options to decay until the market closes. And then, you either buy it back or you just let it cash settle for whatever it is they're worth at the end of the day. So in this case, the prices are not going to update perfectly when it cash settles. So you just kind of have to do a little bit of math. But basically because it cash settled at 56.2582, that means that you had one option that was in the money. So your in the money option is going to be this one right here, the 56.25. Because the spread is on this screenshot anyways, 110 by 175. That's why you're getting a little bit of a wonky price, and this is telling you that the market price is $1.67 for the spread that you sold for 480. In reality, it's only 82 cents. So basically, I sold it for 480. It'll cash settle for 82 cents. So you just, subtract. Okay, I sold it for 480, subtract 82 cents. Then you basically made, $3.98 on the trade. So that'll equal about 83% profit in about 25 minutes. So that is what I have for you here today. That was my SPX day trade. Here's the live charts. Basically, that's the value that it gives you, but then it will update it tomorrow. So it'll just basically be added to my account tomorrow. And then you can see here that this option was out of the money, this option was out of the money, and this option was out of the money. So it's pretty much what you want to see. Now tomorrow we might get the same situation just because the market's going to be waiting on Nvidia earnings. And actually, by the time I publish this video, it will be tomorrow. So I guess I should say on the 28th, we may get this same situation where the market's trading sideways, waiting on Nvidia earnings. We might be able to do it again. So just remember, if the market's boring, if it's not moving, there is a strategy that you can employ, and that is selling premium in the options market. So, hope you have a great rest of your day. If you want to learn more, subscribe to my channel, and I'll see you in the next one.